You don't need 100 doors to build wealth. You need streams. Consistent, compounding, scalable streams of income that pay you whether you show up or not. And real estate offers more of these streams than almost any other investment vehicle on the planet. In 2025, these passive income streams aren't just nice to have. They're essential for financial freedom. Whether you're aiming to leave your 9 to 5, build wealth for your family, or just stop trading hours for dollars, this is your playbook. Let's break down the 7 most powerful passive income streams from real estate in 2025. How they work, what makes them scalable, and how you can start building them, one by one. Because financial freedom isn't a lottery ticket, it's a system. And these are the levers. First up, traditional long-term rentals. This is the classic model. Buy a property, rent it out for 12 months or more, and collect monthly rent. In 2025, long-term rentals are still the backbone of reliable real estate income. They're stable, they qualify for easier financing, and they let you scale with systems and property management. If you're in a landlord-friendly state and you've vetted your tenants right, this income becomes dependable, especially when you lock in long-term, fixed-rate debt. Even modest rents from just 3 to 5 well-managed properties can generate real spendable income. But here's the key. Don't chase appreciation. Buy for cash flow first. Appreciation is the bonus, not the strategy. Now let's move into midterm rentals, or MTRS. The 30 to 90-day rental model is exploding right now. Why? Because traveling nurses, digital nomads, contractors, and relocated professionals all need furnished short-term housing, and they'll often pay 50 to 100% more than long-term tenants. Midterm rentals give you higher income than long-term, with less hassle than short-term. You get stable demand in cities and growing towns. You avoid hotel taxes and short-term rental regulations. Platforms like Furnished Finder and Airbnb are pivoting to support this niche. And with the right furnishings and location, one midterm rental can double the net income of a traditional lease. Now we get to the big one, short-term rentals. Short-term rentals are the sexy choice in real estate, but they're also the most misunderstood. In 2025, STR regulations are getting tighter. Some cities are even banning them. But the operators who know what they're doing, they're still printing money. If you have the right location, the right systems, and the right pricing strategy, short-term rentals can produce 2 to 4 times the income of a standard lease. But don't be fooled. This is a business. You'll need dynamic pricing tools, cleaning crews, automated messaging, and smart locks. It's not passive out of the gate. But once your systems are in place, STRS can become semi-passive cash machines. Next up, real estate syndications. Want to invest in big real estate without being a landlord? Syndications let you pool money with other investors and invest in apartment complexes, self-storage, or other commercial properties without doing the work. A professional operator runs the deal. You just collect distributions, usually quarterly, and participate in the profits when they sell or refinance. This is for people who want mailbox money and scale, but don't want to manage properties. Just know, these are long-term plays. You're usually locked in for 3 to 7 years. And the most important part? Trusting the sponsor. Vet them deeply. Let's pivot now to something more liquid. Real estate investment trusts, REITs. REITs are great if you want passive real estate exposure without managing anything. They're companies that own and operate income-producing real estate, and they're required to distribute 90% of profits to shareholders. That means dividend income without the headaches. You can invest in public REITs like VNQ or Realty Income, or go with private platforms like Fundrise or Streitwise. If you're looking for easy diversification with low capital requirements, REITs are the entry point. Just remember, public REITs follow the stock market. Even if the real estate performs well, your share price can still dip. Here's something most people don't know about. Note investing. What if you could be the bank? That's what note investing is. You buy mortgage notes and the borrower pays you. If they default, you can foreclose and take the property. This gives you predictable income and lower management stress. You're not a landlord, you're the lender. You can buy performing notes where payments are already being made, or non-performing notes where you buy at a discount and work with the borrower or take over the property. Either way, you're backed by real estate. Just make sure you do your due diligence and get legal guidance before diving in. Last but not least, rent-to-own, also known as lease option properties. This is a hybrid model. Part rental income, part future sale. Here's how it works. You rent the property to a tenant buyer. They pay you an upfront option fee. They agree to buy the home in 1 to 3 years. And in the meantime, they pay monthly rent, sometimes with an additional amount that gets credited toward their purchase. If they buy, you profit. If they don't, you keep the option fee and find a new buyer. This works great in moderate income areas or homes that aren't turnkey. You get upfront money, monthly cash flow, and a potential future sale, all in one package. So those are the 7. Now let's get strategic. Which one should you start with? If you want control and long-term equity, go with long-term or mid-term rentals. If you want higher income and you're willing to work, explore short-term rentals. If you want scale without involvement, look at syndications or REITs. If you want to play the debt side, study note investing. If you like creative deals, consider lease options. And guess what? You don't have to choose just one. Many investors build these streams over time. Start with one. Use the cash flow to fund the next. Build layers. That's how real freedom is built. You don't need a big exit. You don't need luck. You need income that shows up even when you don't. Real estate gives you that, with control, with leverage, with compound growth. So now the question is, which passive income stream will you build in 2025? Subscribe for more real estate playbooks like this. Drop a comment with your game plan, and let's get to work.